What's going on, Real Life Nation? Hope everyone is doing amazing. Type a 1 in the chat pane if you made some R's this week, both bullish and bearish. It's been an interesting up and down cycle for a lot of our stocks that we're watching. So yeah, Christine, Bill, hello, good afternoon, everyone. Hope you're all doing amazing. I am going to put a 1 in the chat pane myself. Made some money bullish and bearish on several swing trades that we'll talk about here in just a second. Hope everyone is doing amazing. So SPY, look at this, ladies and gentlemen. Here we are back revisiting all-time highs. Didn't quite close above that resistance level, not quite above where we were hoping to get to continue our bullish trend. Overall, the markets are still bullish. Buy the dip is still in effect. Thank you, Tony. I was wondering if someone would notice my picture looks a lot like Jeremy. We actually got a couple wires crossed. And so I'm using his account and he's using my account for a different event. So yeah, I just want to be like Jeremy when I grow up. That's it right there. So yeah, I was wondering how long it takes someone to notice that, but Tony, you win the prize for noticing. All right, let's take a look at the Qs. Let's take a look at today. Welcome to all-time highs on the Qs. This tells me that tech related companies are still doing really well, still hot. It's still going strong. Of course, today looks kind of like an indecision candle at all-time highs. So guys, what does that tell you? Indecision at all-time highs. What do you guys think? What does that mean to you? Go ahead and type that in the chat pane. Indecision at all-time highs might imply a little bit of a sell-off maybe. And then before we continue higher, right? We'll see what happens on Monday. But kind of breaking out all-time highs on the Qs. It is the only index that we reviewed that is actually up today. Everything's down just slightly, just a little bit. And so, yeah, buy the dip still very, very much in effect. So let's talk about, you guys sometimes ask for crypto. So let's get in there. Let's jump into crypto. This is something that we had actually posted. I believe it was last week when we reviewed this. Look at this, ladies and gentlemen, finally got down to this level. Finally got down to that level, and look at that. Boom, just barely kissed it, got in. And for those of you who did not, if let's say you missed that, here is an idea for you. Open probably an order just a little bit above that level. Do the same thing, wait for a little bit of a dip, and then get in. Now, for those of you who are pretty hot and heavy into crypto, this is a measly 17% pullback, which literally in crypto world is a day or two move. It's, as you guys know, way more volatile than even tech stocks. So it's had a pretty killer run back from let's say the early midsummer up till now, up 178%. Just in a couple months. That's quite spectacular. Obviously, anytime you have a killer move like that, you have to digest some of that move, which happened here kind of in early mid-September, made another push higher. And I think we might get even a little bit more of a pullback. So if you missed that, don't fret. I would go ahead and have an open order right there. And the reason that we drew that line is because of this kind of U-turn, this pivot from early September, right? The price action moved from our lows in mid-July, kind of made a high and then made a nice, pretty strong pullback. And that pullback, this U-turn area is known as a pivot. And so we're kind of drawing our line here. And that was kind of a previous resistance level. As you guys know, we broke out through here several times, touched that level, went higher, and now we are pulling back again. So if you're not in it yet, this would be my advice, $399.66 and change. It doesn't have to be to the exact penny, but that is what I have open in my account. I have some Coinbase, some Kraken, some money in both of those, and both of which are in Ethereum, Bitcoin, and Litecoin. I kind of sticking to the top, the big three. So, yep. Jonathan, you're YOLOing your life savings into the Qs at all-time highs. Is that what you're saying? At all-time highs? Hopefully not all-time highs, but yeah, it's been an interesting run. And for those of you who may noticed, we got a little signal here using the 10 EMA strategy to load up on a few shares, not back the boat, but get in here. I know Ross, Conway, some others jumping into some call options, 60 days out of the money, 60 days expiration, 1 strike out of the money. So just slightly out of the money, and make a nice run every day. I mean, that's a pretty good little run, 4, 5, 6, 7 days in a row, something like that of updates. So yeah, that's the Qs. So let's take a look at Portillo's. Portillo's looks like a brand new IPO. Looks like it had some pretty strong volume coming in on the initial day as expected, as with all IPOs. That kind of implies that the low is in based on the volume. However, I personally don't like to play these IPOs because this volume is relative to the rest of the volume, and we haven't really had a lot of time. We've had about 20 trading days, so about a month, a calendar month. And so on volume like this, you don't really know, relatively speaking, if you get a huge buying volume, volume bar coming in, something like this, in a few days, obviously it's going to eclipse this. So you don't really know. So I personally like to stay away from these types of moves. The only thing I would say is if you wanted to have like a YOLO order open and you only live once, at the open of this, open of the candle right at $26, I think that would be okay. And the reason I'm saying that, ladies and gentlemen, is because imagine getting in at, imagine missing the IPO, imagine missing that candle, right? And you might get some ups and downs, and then it revisits this low, chops around a little bit, maybe makes a new low, and then continues higher. Having an open YOLO order down here at the $26 level absolutely gives you like a second chance to get in if price action gets back down there. Not sure what's going to happen on this one. There's not a ton of history. Even some of our exponential moving averages haven't yet formed on this, our short-term moving averages. So that would be my recommendation. It does look like that it is making a little bit of a series of higher lows. So higher lows, kind of trending up a little bit of maybe not quite, I would say, an ascending wedge, but something that resembles an ascending wedge. Not quite perfect, but that would be my advice, ladies and gentlemen, is buy a little if you want up here, buy some more down here, and sit tight. For me, these are too wild west, too unpredictable, and I like to put my money where things are a little bit more predictable on these. Some of you know that Jeremy actually mentioned an IPO strategy that someone has done really well with, and I want to share that with you guys. IPO strategy equals buy 1K worth every IPO. Now, some of those you're going to lose on $1,000. Think of it like $1,000 lottery ticket. Over time, some of these $1,000 lottery tickets can go up exponentially. Imagine buying $1,000 of Google or Amazon or any of these that have been around for a long, long time, Shopify. $1,000 worth every IPO. Obviously, some of them are you're gonna lose a chunk, but it's kind of a little bit higher risk, high reward type strategy. So that is another alternative strategy to consider. Walk us through MSOS. Not sure what that means. MSOS, is that a ticker symbol? So we can cycle back around to that pay. Yep. Okay, let's move on. So Boot Barn Holdings, we got some short-term signals to jump in a few times here. If you missed that, let's take a look at our bigger long-term averages. It is moved quite a ways from our long-term moving averages. So if you were to look at this trending up this kind of channel and then obviously breaking out, going even higher. So my advice would be wait for it to come back. Yesterday being all-time highs, today pulling back, looking not quite perfect, but something like an evening star reversal. So like a 3-candle pattern, and a 3-candle pattern, candle number 1 is up, which would be this candle right here. Candle number 2 is a little bit of a sideways, or we'll say indecision candle. So not quite figuring out what to do. And then the 3rd candle is moving down. So you guys will recognize this is kind of a U-turn, kind of a turnaround 3-candle pattern. And that's kind of what these 3 candles represent. So obviously, you don't want to buy at all-time highs, and there's not a lot of fear coming in yet. Hasn't been a pretty good pullback, but those of you who are interested, get in kind of as it retests this this previous resistance here, this channel that was forming. You want to buy down here, wait for a bounce, and then continuation higher. But this type of a move all through here, this is a parabolic move, parabolic. So it needs to digest that. Obviously, 1 candle right here is not enough to digest. So that would be my plan, my suggestion, to pick up some shares around $110 right here off of this top side of this channel that is forming. So that is my suggestion on Boot. And again, we are quite a ways. It looks like we have never actually, this whole year, we have not ever interacted with these long-term moving averages, which is pretty spectacular. Yeah, definitely bullish. Okay, let's look at PRFT. Same, man, looks almost exactly the same, right? Where same as Boot Alliance, where you have a nice run higher, kind of hitting a little bit of a channel, or kind of channeling a bit, kind of an ascending channel, and making all-time high back there 2 weeks ago. So my advice for this, if we were to look at our moving short-term moving averages, it looks like it interacts with this 10 EMA fairly well. So I would personally wait for a little bit of a pullback or a move just a little bit lower. I would say something like 135 level, something like that, where if you were to look, let's remove this line. If you were to look at the this previous pivot here, this previous U-turn that kind of acted like previous resistance, hit its head, boom, breaks above, kisses that level, and I would expect something like this to occur before a move higher. So you want to be careful jumping in at or near all-time highs, especially with big volume. If you want to pick up a few shares, nothing wrong with that, but I would be cautious about doing that at all-time highs, because you guys know how these stocks work, especially Murphy's Law. Whatever can go wrong will go wrong. And so getting in with big size close to all-time highs, where it touched that previous level, just be super cautious about that on perficient. Okay. Next up is roadblocks, RBLX. I know a lot of traders making some serious gainage on this, on roadblocks. I actually am not in this. I'm wishing I was, but I'm not. The obvious move after it made this massive gap up would have been to play the indecision candle right there with a break higher. However, if you missed it, I think it's time to wait a little bit. I would absolutely wait. Do you not want to buy at all-time highs? I would say this needs to rest. It needs to digest this pretty massive move from the close right before earnings was $77 to where it is now 134, almost double. And what is that, like 2 weeks time? So yes, please, congratulations to those of you locking in your gains. If you're in this already, I know Hector, some of you guys are in this, consider setting up a collar. So if you're not in a collar, consider maybe selling a 150. Okay, let me clarify. Wait for an up day, a strong up day, kind of making a new high, and then set up a collar where you're going to buy an at the money put and sell an out of the money call. So we'll call this a short call, covered call, and then you're going to buy a protective put. And here's the cool part, guys. Let's say that you're able to collect $5 up here, and then you're able to spend $7 down here. You're out of pocket how much? You're come out of pocket only $2. And this is a little bit of an advanced / intermediate strategy. And the idea here is that you're able to lock in gains. Imagine a big, strong candle like this sometime next week. You're able to lock in gains for pretty cheap, and it turns into an unlosable position. And that is Roblox. That's my suggestion. If not, you don't want to be buying at all-time highs. Do not want to be buying at all-time highs. The thing I do like is a lot more volume coming in kind of post earnings. So I'm thinking this will probably sell off a bit the next week or two. So yep, that is my suggestion on that. TDOC, ladies and gentlemen, I had some long puts expiring on this. This has been one of my nemesises this year, and I finally just let that thing go. I did take a small loss on this, but it made some serious coinage on the long puts. Yeah, it was time to move on. So I do want to mention something to you guys who you may never really thought of before. But let's say that you're sitting on a losing position, and let's say it's been losing for some time, and you just don't want to admit it, and you don't want to take the loss. I will tell you that there is something that you might want to consider, and we'll call that opportunity cost. Okay, meaning I'm waiting for a miracle on TDOC, right? I'm waiting for a miracle on TDOC. Miracle may never come. Okay. Meanwhile, there's tons of great setups that we've already looked at just today that if I'm sitting on a big stinker, like let's say you're down 3 grand, 5 grand, 30 grand, whatever it looks like, whatever your account is, whatever size, that is money that I'm not able to get, that's tied up, that I'm not able to get into new opportunity. Does that make sense? So type a 7 in the chat pane if that makes sense. If you're sitting on kind of a losing position. So actually both TDOC and Fastly, I had some pretty sizable positions on both of those. I went ahead and my collars expired. I didn't take a huge loss, but small losses on those. I just been sitting on them too long. I'm like, you know what? There's plenty of things out there that are moving, and I don't want to sit on this too long. So here's a little glimpse of what happens. What happens when this is AAPL, not on our official watch list today, but I want to show you kind of what happens when you kind of hope for things to turn around. So imagine this stock kind of trending a little bit sideways. Obviously, in early 2020, it looked a little healthier, right? And then the stock just gapped down. And you're like, okay, well, I'm just going to wait for it to come back to break even, whatever your average cost is. Let's say $140. And ladies and gentlemen, that day may never come. And you might be sitting on this for a while, right? It depends on what your cost basis is. But this thing it goes sideways and then it goes lower. And it's just one thing after another. You have a big loser that you're sitting on that ends up just taking up kind of some energy, some stress, something like that, that you just, obviously, you want to trade your plan. And but you want to be mindful of, you know, how much of this has just gone sideways to lower, just even since the beginning of this year, if we were to go back to the beginning of this year. So just be mindful of that. If you're in losing positions, don't get stressed. You know, make sure you, when you get into trades, you know when you're going to get out. Another example that would be something like BABA. I mean, how well has this thing done since the beginning of the year? Just lower and lower and lower. And I know plenty of people who have pretty sizable positions on this. It just kept going lower, lower, lower. And the mindset, the initial thought is, I'll just wait till I get back to break even. Let's say your break even is right here at 230, and you know, right here you get in, and it just goes lower, 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 and then gaps lower here over earnings. And you guys can you know how that movie is going to end, and it as long as you are executing your plan, it's going to be okay. But your plan absolutely needs to include when you're going to get in and when you're going to get out, when you're going to get in and when you're going to get out. So here's 3 little tips I want to throw out to you. When to enter, so like where are you going to buy, when to exit for a loss, or let's say a win, and then when to exit for a loss, like when are you going to take the loss. And one of the things, guess which one of these 3 people get right. Usually people know when to enter. That's pretty easy. But guess which one people forget. Type in chat pane. Which one do most people forget? Especially in retirement accounts, it's super easy to just accumulate shares on down days, and then it goes lower, 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 and people always forget about when to exit for a loss. So imagine on this just exiting, you know, at 209, right? And you're buying at 230 and exiting at 209. Look at all this headache you would have saved yourself had you had this in place. So I just want to encourage you guys, think about that. Absolutely makes sense to have that in place. Is that making sense? Perfect. Okay, so TDOC, letting it go. I'm giving up a little bit, small loss, not huge. I only had a couple hundred shares, but I'm gonna let it go. Gonna let it go, reset my mind, get some more cash back in my accounts, and revisit, fresh start on Monday, right? Live to tell another day. So this one just frustrated the daylights out of me. And then of course, right here is let's see, yeah, right here is because it went lower there, is why I had to shave my head. And then it ended up going higher and then lower. So again, you know, it is what it is. It's time for me to move on. So being transparent with you guys. All right, next up is Facebook. Facebook, the new meta platforms. I don't know if you guys have ever done some virtual reality. It's actually pretty interesting if you guys have done that. Type a V into the chat pane if you've done some virtual reality. It's actually really, really interesting. My wife and I, we're actually empty nesters now, and we were taking in some foster kids from time to time for a week at a time. And we actually went to a place down the road that has it's like a virtual reality, it's like a game room. We did this whole thing with virtual reality. It was pretty wild. First time I've done that. And imagine wearing virtual reality headsets, and we were just playing Angry Birds in like 3D, right? Where you're shooting the little, I don't even know what those things are, the little creatures with a slingshot, and you're doing that, and it's pretty interesting. Now, if Facebook is able to monetize that and figure out how that's done, you know, more power to them. But it's pretty interesting technology. Yeah. Pretty interesting technology on Facebook. Thanks, Tom. Facebook is you know, trying to change the game, and it's very much a long play. We'll see what happens. But here, my advice, this is what I would do, is wait for 329. Wait for a little bit more of a pullback. It sounds like that's always going to be the question, the answer to all my questions. Would you buy here? Wait for more of a pullback. So this is what I would do, 329.40. If we were to turn on, I don't know if you guys have seen these volume profile type things, but boom, 329. Oh, look at it. It lines up almost perfectly. 329.40 on Facebook. And these volume profile indicators are basically where there's lots of interactivity at certain levels, certain pricing levels. So I think this one goes back, I think it's like 200 days. So yeah. So that is super interesting. If I was to look at a kind of a shorter term moving averages here, on these are the 10 and the 21 EMA. You can see our short-term moving averages look like they're about to cross, which tells me that a bullish swing trade is going to probably, assuming you get a little bit more higher action in the next day or two on Facebook, the bullish trend is going to continue. And we went from March up here to about September. Nice run of what was that price wise? 266 up to 362, almost $100 of gainage on the Meta platform. So we'll see what happens. If you guys haven't seen all the memes related to Meta and Feta and all the memes, pretty interesting. But yeah, that's what I have for you on Meta platforms. Next up is CHWY. CHWY looks like it is hanging out, just consolidating a little bit. I think we're below our long-term moving averages. Yep, on CHWY. So again, if you have a stock and it closes below a 200 simple moving average, it's not the end of the world, but ideally you want it to be able to reclaim it. This took a couple attempts and it finally did, I guess in mid-July, and then closed below, still not able to recover that. So it looks a little weakly to me, little weak. We had a trade in, I guess it was a month ago on this. Kind of got in and out, quick in and out trade on CHWY. For right now, I would actually wait on this personally. I would wait on this. Yep. I think it's still got a little bit of recovery to do. Had quite the gap down. Has not yet filled this gap, right? It has not filled the gap from, I guess, the previous earnings. And then you have earnings coming up here in about 3 weeks, something like that. So I would wait on this if you're not in it, or obviously day trading and do whatever you want there, but I would wait on this on CHWY. Next up is CLF. We have an official trade, not yet quite triggered into that. I thought for sure today would be the day. Nope, not today. Not today. So this is the official trade that we set up. It is still open. We are not in it yet. And this was the idea where we had a pullback to the 200 simple moving average with a stop below here. Why is the stop here? Well, this kind of recent pivot from mid-September. And so we're going to give it a little bit of breathing room right through here. Give it some breathing room in between there and wait for that pivot to a retest of that pivot. We don't want to get punched in the face to the penny if we put our stop right there. I know you guys sometimes are tempted to do that, and I myself did that all the time, and you'll be surprised how many dollars I lost trying to save a few pennies. We've all, Thomas, I know we've all paid our share of stupid tax, and I want to pay as little as possible, right? So yeah, that is my idea on Cliff. We'll see what happens maybe Monday, Tuesday. Get a little bit of we just need a little bit more. Not quite. We're close. About 60 cents, something like that. 21 to 2040. So yeah, we'll see what happens on Cliff. That is my current open idea. If you are not in that, there is an exact trade idea. We're risking $2. So 2040 to 8 by 1840, we're risking $2. To make $4. So a 2-to-1 risk reward. And I like these trades where you don't necessarily have to make it back up to all-time highs, right? Because a lot of times those act as resistance. So we don't have to get back to all-time highs. So yeah, that is the idea on Cliff. All right, next up is pizza, of which I am not allowed to have. I am on the 75 hard diet, and pizza sounds really good right now, guys. I'm not gonna lie, really good. They are really, really good. I'm on a grilled protein and vegetable diet, have been for about a month and a half. Got another month to go. So here we are talking about pizza. Matt's distracted already. Let's take a look at kind of some of the shorter term. This is trending nicely. As you guys can see, our short-term simple, our short-term moving averages, exponential moving averages are trending nicely. Our blue line is our shorter term 10 EMA, and our 21 EMA looks like it is, it's definitely continuing to trend higher. And then this huge move, obviously it digested a little bit of that for about a month, I believe. So September, about maybe 6 weeks, something like that. Reached a new all-time high, then sold off a little bit, and it's continuing. So my suggestion, my advice on this would be wait for more of a pullback. That's always my answer. So my thought on this would be put in something like this, just a little bit higher than the typical trades, or the typical. So like the typical pivot here would be like right up here, something like that. But I'm thinking, because it didn't quite digest that fully, or at least doesn't look like it to me, this is what my suggestion would be, something like this, with maybe a stop down here. So we're waiting for something like this. And as you guys can already recognize, our 2R target would be somewhere up in this range. This is not precision to the penny targets here, team. But again, I don't like to have all-time highs just to make a 2R. But this could easily, I believe this could easily pull back, kind of make a little bit of a high, pull back just a little bit more, and then continue. That's my thought on this food I can't have, Papa John's pizza. Papa John's pizza, yep. So that is my thought, 128.97, and let's actually make this right to the penny. Let's just say 125. 125, and then we can make this 129. $4 a risk to make $8. So that would, let's see, that would make this 133. I know, Thomas, you're already thinking about the precision of this. I know. And then this would be 137. Boom. There we go. There we go. Boom. All right. Let me take a picture of this. Boom. Put it in my notes. Boom. Oops. Try again. Copy. There we go. Try again. Come on, cooperate. Copy link to chart image. There we go. Okay. There we go. Got it. Got it. Okay. So yeah, Papa John's. All right, next with DraftKings. Ladies and gentlemen, what do you think? DraftKings. This is not bullish. Even with our exponential moving average, not bullish. You guys can see our previous pivots here. Not only did we take this one out, and then we took this one out, and now we're going lower. So this might be an okay bearish trade. I just don't like taking bearish swing trades kind of at relative lows, right? Typically, if you're taking a bearish swing trade, you want a little bit of a pop. You short on the pop and then let it roll over again. I think most newbies take all-time low breakdowns. So that's not quite what I would recommend. I do see over here was another kind of pivot, so that might bounce there. I don't know. It looks like it was doing well up until April, and then it's just kind of chopping around, and now it's breaking down kind of a relative lows. So on this one, team, let's wait. Let's wait. If you're interested in gobbling up a few shares or just tiptoeing in, I think that would be okay. On DraftKings, I think that would be okay. Let's take a look actually at, let's take a look at it behind the scenes. I've not looked at this one in a while. Good golly, look at that. Sales of 319% quarter over quarter. That's pretty attractive. Gross margin 41%. I guess that makes sense for their business model. They're losing money. They're actually spending about $2. I'm sorry, for every $1 of revenue, they're spending about $2.20, 25 cents, 26 cents on their expenses. So, and then the PS ratio is still 27. Wow. Here's what's crazy, Thomas. Look at this. We're up here in the 70s just back in early or late March, right? 27 price to sales ratio. We're now down below half of that, and it still looks kind of pricey on a valuation point of view. Now this, I won't lie, this looks pretty nice. That's obviously just a single quarter, 319.7%. And as you guys know, I'm okay with companies that are losing money as long as they're growing. What you don't want are companies that are losing money and then shrinking or barely keeping up with inflation. You really, really don't want that. But yeah, I'm gonna wait on this one. Definitely wait. So yeah, you are right, Thomas, because the this obviously the revenue was, even if it was flat, it was probably higher. I'm guessing, but yeah. So that is DraftKings. We're gonna wait on that. Does not look super. Guys, here's the way I look at it. All right, this is kind of trending down, kind of chopping, going sideways. Long-term moving average is going down. Now, do you see anything different between that and this? See anything different between that and this? See anything different between, right? You guys see the difference? So I just want you guys to think about that. Obviously, you can tippy toe in and buy a few shares, but you don't want to get caught buying a falling knife. You don't want to go in full size right here, and then for whatever reason it goes lower and you buy some more, and then it goes lower and you buy some more. Then it goes lower and you buy some more, and then at this point you're at max pain, then you sell it, and then it bounces. You just want to be super, super careful. This is not, to me, this is not buying the dip. This is buying a falling knife, right? So you get your hands cut up a little bit. But yeah, if you're short, absolutely. If you got a good entry, let's take a look at this on a short, on a 78 minute. Let's take a look, see. So yeah, so if we're using our kind of our shorter term time frame strategy on Momo, you would have got chopped up a whole bunch through here, and you would have got in short up here, but it's already made a good run from 47 down to 36. So you got an $11 gain on that already, and it had a pretty good run through here. So let's take a look at. So yeah, it looks like it's had a decent run, but overall, since the beginning of the year, not super sexy profits on Momo on this exact stock. If we look at a shorter term time frame, yeah, you'd be losing 22%. Obviously, this is historical. This is just a testing tool. Look at it on a 15-minute. Look at that. 15-minute chart. You're able to look at our trades, and we can verify that it does go back to the beginning of the year. So equity curve looks decent. Obviously, I had a little bit of some dips right through here, but yeah, I mean, look at that. I need to put that on my list of stocks to review for another strategy I'm working on. DraftKings 15-minute. Look at that. And then compared to your buy and hold 21.58. Yeah. Okay. So, oops, sorry. Do nothing on this now. Obviously, it looks like you could swing trade this on a 15-minute chart. Obviously, you could do that. You absolutely could do that. It looks like our average, what was our average hold time? It'll tell us how many bars. Let's see, average number of bars in a trade is 53. Yeah, that was a 15-minute Momo. So I'm going to actually study this one a little bit more for you guys. Give me one sec. So it's saying average Oh, here's the cool part, guys. Look at this. Average number of bars in a winning trade is 49 or 12. So if you're to look at 12, that's 180 minutes. So basically 3 hours, which means if it's going to lose, you're going to lose on average quickly in about 3 hours. And then our 49 bars is our winning trades, which is basically about 2 days, 49 15-minute bars. So basically about 12 hours and change. So on average, your winning trades take about 2 days, your losing trades, you're in and out in 3 hours. So yeah, yep, something to consider, something to think about over the weekend. Yeah, I'm always playing and testing with some cool stuff. Okay, next up is Disney. Okay. So we finally filled the gap over here from last year. I don't know if we filled this one yet, so maybe we come down to 128. We obviously have to fill this gap. So on this one, team, I say just chill, relax. Don't buy the falling knife on that. I would pass on this. Here's the thing about these massive companies, guys, is they are slow and steady typically. Sales 44%, not bad. Gross margin 24%, kind of about what a retail company would be. The challenge with these massive companies with these huge valuations is that they're not going to quadruple. They're not going to quadruple in the next couple of years. I don't see that happening. They've already made these massive runs. $284 billion company. I just don't see that happening. And the way that this company is organized, it's not easy to, just go build a new park. Obviously, they can acquire companies, but it's just not it's not something that's easy to do once you're at 67 billion in sales to keep growing at a certain size / pace or clip, right? And so in my mind, these are fine if you want to have some shares in your long term, but don't expect these to 4x, not 4x, but 400% return, right? So that's kind of my thought. If you want to tippy toe and buy a few shares, just be careful about buying that falling knife. This is what a falling knife looks like. If you look at our short-term moving averages, obviously the last time we crossed was over here back in September. And from here, it tried to recover twice, failed. And I think this is going to be going lower for a time being. Does that mean I'm automatically going to short it? No, because I don't like shorting at relative lows. It doesn't make sense. You want to short on a pop. So let's say that gets back up to here, trying to fill this gap, and it fails and just rolls over. That would be a time to short it, not kind of at relative lows. As what most people do is try to short at relative lows, and then obviously if it bounces, then people are going to lose their junk, and then hits their head on this resistance, and then goes lower. That's the ideal time to short on pops. So on this one, for bearish swing trade, I would hold off on this one on Disney. Be careful catching that falling knife. A lot of these companies have just the earnings just were not well received, and even some of these where they beat their earnings the last few quarters, just I don't know, didn't seem to have the reaction most people expected. So all right, Apple, geez, we're at all-time highs. Does anyone know how many shares of this Warren Buffett has? Does anyone know? That'd be cool to research. But our short-term strategy is saying buy on that day right there, which would have been November 12th. I don't trade Apple myself personally. I know Jeremy looks at this thing every single day. Obviously, you guys know Jeremy has a history with Apple, with his connection to that. I'm blanking on the movie Forrest Gump. Yeah, on Forrest Gump. But yeah, all-time highs. So lock in some gains, sell some covered calls. This is not a time to callers even would be great. This is not a time to be buying at all-time highs. You want to buy on sell-off, buy on down days, right? So if you're not in it, you will get an opportunity, to get in it. Nothing wrong with setting up some orders right here. Actually, look at that, guys. Hammer right there, kind of right below the 100-zone moving average just about a month ago, maybe 5 weeks ago. That would have been the opportune time to get in, kind of right before earnings. Earnings kind of a little bit of a nothing burger. Yay, you know, chopping around, doing something. And then they must have had some news or something that came out today on Apple, but was that I don't even know what it was. Anyone know? But yeah, Apple, not a time to jump in. Be, I would say, wait for a pullback. Be patient. Patience pays, right? Okay, next up is Steel Dynamics. Look at this, kind of chopping around, trying to digest this crazy move that it's had from 35, literally up to 72, almost 75, almost, I guess it's doubling in a year. Yes, please, right? Doubling from here to here in a year, or even less than a year. I guess that's not like 8 months. And so it still needs to digest some of this move. It did a little bit here. So thoughts are, let's see. My thoughts are if you want to consider pyramiding into this guy, that's what I would do on something like Steel Dynamics, where we're setting up a couple different levels. 1, 2, I always do my bottom one below the 200 moving average. You want to set up some pyramids, something like this. You want to get in a few shares to start with, 10, 20, 30%. If you want to do that, set up a pyramid like this, I think that'd be a decent way to trade something like this. It is a little bit choppy at the moment, kind of going sideways the past month or so, but this will allow you to kind of take advantage of some of this if it does take a little bit of a pullback, something like that, and then a kind of your emergency brake protection right down there. So that is my thought on that. Okay, let me go to ONON and then we'll cycle back to Upwork. Got a couple people wanting to look at Upwork, so we're going to spend a little more time on that. So Steven Jackson saying Apple had a breakthrough on their EV car. Nice. Apple car. Nice. And I saw someone posted a meme of, you guys have seen the Magic Mouses that have the built-in battery where you have to tip it upside down and plug it in. I saw that same meme for an Apple car. You have to tip it upside down to get the plug onto the bottom of it. Kind of funny, but they're going to have it by 2025. Nice. Nice. So I wonder what Tesla, yeah, so Tesla's not intimidated / they're like, whatever, bring it. So yeah, makes sense. All right, so ONON, on holding, new IPO, close of the IPO there, boom. And this team is why I don't typically buy IPOs, because you usually have a nice run higher and then it falls off the cliff and goes below your actual IPO level. And for those of you who want to practice that $1,000 at the open strategy, absolutely could do that. There are a few things that I do notice about this. One is our selling volume right here. Selling volume on the opening day, which, you know, it's not enough history really to have even our short-term moving averages, right? Oh, we do have short-term, but our long-term moving average. So this IPO, this stock still in its diapers. So this kind of selling volume kind of assumes that if we're able to close above that level, that it's going to pinch and go higher. But in this case, it actually did the opposite. It pinched and went lower, right? And so it acted kind of like a little bit of a resistance, then support, and then kind of acted a little bit like a resistance there, continuing higher. So on something like this, it looks to be like the volatility is absolutely picking up. So if you were to study like the size of these candles right through here, so the size of them would be the range from like the high to the low, and then compare them to these most recent 4, you'll also recognize that there's a lot of volume coming in. So a lot of buying volume, very little selling volume. So it tells me that there's some accumulation. I think that this thing is going to continue higher. The challenge is where to buy on something like this. So my thought is something like this right here at the $40 level would make sense, where it previously had this pivot, kind of rolled over twice, acted kind of like a resistance level, now can become a support level. So that would be my thought on ONON, kind of a $40 level with, where do you put your stop on something like this? I don't know, maybe somewhere like this, something like this. Let's see, limit buy. $35. And we can move this to probably about, here we go, $39.80, something like that. That would be my advice, my suggestion on ONON. All right, so let's talk about Upwork real quick, and then I'm going to show you guys a couple things. So had about 6 people ask for this Upwork. This was my original idea for pyramid. This is the original idea. Not quite got the 4th level filled. I know Jeremy is a huge believer in this. Got some nice size set up on this. So here is the thought. Is Steve James asking for this as well. If your average cost basis is here around the 43.26 level, when you guys know that we have a calculator that helps us size and actually enter in these orders into like Thinkorswim, like a copy and paste type thing, right? And so when you're getting into these, a lot of people, they want lower until the price action actually comes in, and then they don't want like a lower price move. So my thought is on something like this, if you have this level, and we can put an alert on it, we'll say let's say Upwork buy protection, close below, and then let's use the variable of whatever the closing price is. Do something like this. Now, at this point, once I get this alert, that's going to come in at the, actually, let me double check that. It's going to come in at the close, once per bar close. Actually, we'll do only once. No, let's do it that way. So this alert is going to come in really seconds after the market closes, right? So what I'm going to do is I'm going to have an alert. I'm not going to rely on that, but at the end of the day, each day before the market closes, usually about 30 minutes before the market closes, I'm going to cycle through my list. And if I got a candle that looks like a black or red candle that's just kissing that level, whether or not it actually has closed, knowing that we have about 30 minutes left in the market, I'm going to go ahead and get an order ready. Right? I'm going to get an order ready. And I'm going to buy my protective, or I won't put it in, but I will get it ready and then wait until maybe a few minutes before the market closes. And I'll go ahead and buy some protective puts. And the idea here with this is the one thing most people forget is most people get the whole idea of pyramiding, right? You're buying a few shares, you're buying a little more, a little more. And that's kind of what you're doing is you're waiting for it to go lower. The real problem comes in is if you have a huge candle that you get filled on all these levels really quickly, that's usually a bad sign. That usually means we got lower to come. It's going to make a strong lower move. But in this case, you got filled over a course of about a few weeks, right? So you got this first and second level in about 2 days time, kind of went back up and then rolled over, which kind of implies that this top level acts like a little bit of a mini resistance, and then just selling. So it's not the end of the world, but we do have one more level to go, not quite filled today. And so that is my thought on Upwork. This is how you can manage your risk. What you do not want to do is a pyramid into it and have no idea where you're going to hit your max pain, right? So our previous pivot right here, kind of mid to late August, and our line is below that. So what does that mean? That means we could literally get a retest of that level, which is fine. And my protective stop or my protective put are going, my long puts are going to be added right there when we close below that level. So Cindy is asking, yes, I typically buy a little bit. Usually I'll buy an at the money put. By the time the price action actually gets down there, you guys can expect to pay a premium. You will be paying a premium. This is the equivalent of Uber surge pricing. They know you want it and you're paying for it, right? But there's no real alternative. You obviously can't short and long in the same account on the same symbol, but that's kind of how that works. And so typically I would buy an at the money. I don't know if there's a $38 Upwork option, but I can actually check. Let me see what Upwork has available. Let's see. Give me a second. Team, Upwork, and option chain. Let's see. So typically, Daniel, I would do 30 to 60 days. That's typically what I would do. So right now I'm seeing December 17th and January 21 is 28 days or 63 days. So let's look at the 28-day option. Let's look at, is there a $38? There's not. There's a $37.50 and there's a $40. So obviously 30 by the $37.50, right? You'd buy the $37.50. And right now the price is $1 to $1.10. Once you get closer to that price, it's probably going to go up, right? Because of the volatility. So I think it's okay. I think it's okay to continue with this exact plan, knowing that you have one more level to go. And again, most people are okay with pyramiding in until they realize that your very first level, this level is going to be red, this is going to be red, this is going to be red, and this is going to be red. As each of these levels are filled, the entire trade is going to be red, right? Meaning the P&L. But the cool part is your average cost basis is going lower, lower, lower. So give me a sec, team. Let me see if I can find my little spreadsheet. I might have this already mapped out. Give me one sec. Yeah, Daniel, it's actually no big deal. Like it's once you practice this a little bit, it really becomes kind of second nature. So let's see, calculator. Let me see if I have Upwork plugged into that. If we do, I'll share with you. Okay, so these levels are just slightly different than what I have. 40, 50, 43, 40. Okay, so this is like 45, 50. Okay, so here's what I'm looking at, guys. Let me bring it over to this screen. So right here is what we're looking at, this little piece here. And what I'm saying is I'm going to spend $50,000 on Upwork, okay? And in this case, when I first got into the trade, the price action is already below this top level. So instead of buying 10% up higher than the current price, I just said I'm going to skip that and buy 30 down here. So in this case, my as I buy the second, third, and fourth leg, my average cost basis here is going to be going down, right? Cost basis is going to be going down because I'm buying more and more shares each and every time, right? So I'm buying more shares, right? You guys see each time I buy, I get more and more shares. So that my average cost is going down, right? So then at the end of it, I'll have 1,170 shares once I get this last leg filled. Make sense? And for those of you who don't know, you can actually copy and paste this blue chunk and put it right into Thinkorswim, and all your levels are predefined. And then here, let's see, my insurance below 3650. And actually, I just realized we are going to have a 3750. Okay, so we're going to just buy slightly in the money, so 3750. So our max loss on a $50,000 spend, our max loss is going to be 2538. Now, this does not kind of take into account how much you're going to spend on the long put, right? It's not going to take that into account, but you can assume it's going to be for, in this case, maybe 10 contracts. You can assume it's your max loss is going to add up a little bit, but you got to spend some money on the insurance, right? So it's not a easy way to kind of calculate what that's going to cost you. But that's the idea, is you have your predefined level of when you're going to bail on the trade before you actually get into any of it. What a lot of people do is they'll buy 100% of the shares, then 100%, then you end up spending 4x more, and you really never want to add to a losing position ever. And the only exception is when it's part of the plan, like when you're pyramiding and you're just tippy-toeing in. I'm not spending 100, I'm not buying 100, I'm not buying 1,000 shares here and 1,000 here. If my whole entire plan is to buy 1,000 shares, I'm not going to buy 1,000 here. Then it goes lower and I buy another, then another, and another. So just keep that in mind. So Thomas is saying 12 contracts, $2 each. Well, 37.50, I guess, Thomas, when it gets, the price action gets lower, the IV would be up. So it's a good ballpark level for the current. Yeah, it's about $2, 2,400. Yep, got it. Okay, does that make sense, guys? Let me know if you have any questions on that. Otherwise, we can kind of touch on what stocks you guys would like us to review on Monday. Yeah. Oh, so you're kind of implying that it would be $2. I see. Yeah. Okay. Yep. And then once you have your insurance in place, the way as long as we're closing below this level, I'm going to keep my long puts on, right? So if it goes below, I'm going to add my long puts. If it ever closes back above, I'm going to dump the long puts. So what you don't want to have is those long puts in place when it recovers, because then all the money, the 2,400 you spend on insurance, you're going to give all that back. Right. So you're making money on one. It's kind of like trying to go in a speed boat while you're dragging an anchor. You want to drop the anchor. You want to drop the emergency brakes when you don't need it, when it's down here kind of below in this danger zone. Right. You just want to only have long puts in the danger zone. Right. Make sense? Cool. All right, ladies and gentlemen, hit me with your stocks. What would you like to see on Monday? And we can wrap up. What would you like to see? Coin. Yeah, coin. One of my new favorites currently. All righty, let's take a look at coin. Apps. Yep, another one. My faves. Plantar. Yep, got it. PayPal. Whew. Oh boy, that's another one of those. Okay, Cindy. Yep, no problem. Got it on the list. PayPal. What else? Let's go ahead and add our normal indexes, DIA, IWM. How about we look, pen, yeah, perfect. Has anyone looked at this guy, LCID? I actually have a 30-minute Momo that I'm running on this right now, and it's done okay this week. We'll just say that it's done okay. Chopped around a little bit, but yeah, it's done okay. Enter here, exit here, chopped around a little bit, got in, made a nice run higher. Actually exited this one early. Exited this one early, and then got in today, signal there. So just usually $4 per share from the robot, no big deal. But yeah. Cool. X. Yep. Got it. X. Cool. All right. Anything else? AXP. American Express. Got it. Tony. Yes, sir. Thank you. Yep. Anything else? I would say let's revisit Apple and Tesla again as well. Apple and Tesla. Oops. TSLA. Whew. This one's making some moves. Yep. CrowdStrike. Got it. CRWD. Cool. All right, team. Thanks so much for sharing your afternoon with me. And as always, don't forget to love life, live life, and trade it. Thank you, and have a great evening.